Hello, it's Richard Pears from FinextraTV, and delighted to be joined today by Bevis Watts, who's the CEO of Triodos UK. Hello, how are you?
Hi, Richard. Good, thanks. Yeah, looking forward to restrictions easing, but all good.
Well, today's the day, isn't it? It's extraordinary to reflect that it was a year ago, almost to the day, 23rd of March or something, that you and I fashioned a quick interview together because you had to be, stay in Bristol. Do you remember that? It was, almost a year, as I say.
Yeah, I remember it vividly because we were all running around trying to sort of predict business continuity issues and what the pandemic was really going to mean and so on. So it was an incredible time, but yeah, a lot to reflect on that year. A lot of positive things, a lot of lessons learned. Yeah.
Well, let's start there. I mean, how has it been running a sustainable bank as a CEO, this year?
Well, I mean, firstly, running any bank is, I think, has been a big stretch during this year because we've got a responsibility to ensure continuity and we continue to serve customers and remain robust as a bank. And I'm very pleased to say we've done that. We've maintained service levels throughout the pandemic and have come through it in a very robust way. So we've just published our annual results, which show very solid performance across Europe, but in the UK. Particularly good results. We saw very fast growth in our customer numbers, 20% growth just in 2020 and 65% growth year on year on our investment fund sales. So I think the pandemic has also helped get the message across that we need to be changing the system and really thinking about how we redirect money as a force for good.
I mean, that's really extraordinary, and I think it's good to hear, because last time we were talking about, is this a business that can be values and value? And you answered that robustly. And obviously, the next question people were saying, oh, but wait for the next crisis. I mean, you've come through that. Has it changed anything in the way that your sort of vision or ethos or operations, significantly over the course of that year? I'm curious.
Well, I mean, I think the first thing is we shouldn't be complacent, because I think the effects of the pandemic will live with us for another 2 or 3 years, to come. But I hope will continue to come through it in a very strong way. I mean, it will absolutely change how we work. I mean, interestingly, it's made us a lot more accessible for customers. So say people we lend to, we now have many more people around the table and, engage much earlier and talk to many more senior people in organisations than we would have historically done. So I think it's actually facilitated deeper relationships in that respect. But yeah, it will change, as it will for many organisations, just how we work together forevermore, really.
Yeah, absolutely. Well, we're talking today as a catch-up, but also we want to sort of drill into the theme, that's emerged, obviously, in terms of a lot of publicity, but clearly been around for a very long time, particularly for you, which is around biodiversity and natural capital. And at sustainablefinance.live, we're running an event on this topic. So I wanted to talk to you to really sort of understand, first of all, your contribution to a thing called the Dasgupta review, what that is and what you think the importance of that is.
Yeah, I mean, so we weren't directly involved in the Dasgupta review, but I've been involved speaking at events to do with its launch and so on. And I think it's a really seminal piece of work and an important piece of work that really dispels the myth that in some way the natural environment and our economic systems are disconnected. It really shows the inherent connection and the fact we've lost sight of that, and we have a real asset management problem where we're currently looking at the natural world as a sort of asset we sit on top of, if you like, and try to manage and exploit, where we need to see ourselves much more as part of that system and that asset, and see ourselves living within it and caring for it in order to protect the economic and social benefits that we all take for granted and are totally dependent on for our own prosperity and our own well-being in the future. That we really start to address that. And start to sort of think about how do we embed biodiversity considerations into our financial decisions, into our economic decisioning.
Absolutely. And so the Dasgupta review obviously put the economic case forward, but when you looked at it as a sort of tangible set of actions, it for me it sort of trailed off a bit in terms of we need to educate people about the points that you've just made. It's interesting you guys have followed up with PBAF Tell us a bit more about that, because it feels to me as though that starts to move from that big picture into a practical application of something for the banking community or the investing community. Would that be right?
Yeah, I mean, there are various things we, are calling for in order to try and make the sort of the ethos of what comes out of the Dasgupta review a reality. I suppose, really. I mean, the first thing would be maybe moving from voluntary minimum standards to mandatory ones. So we set very high minimum standards. That means we don't get involved in pesticide production, deforestation, and we'd call on other banks to raise their own bar. But we should be perhaps looking at red lines in regulation around those sorts of issues as well. But really, if we're going to make progress and really own the challenge of restoring the natural environment, we all have to start from a common benchmark of understanding our impacts. And so this mirrors something we've done in respect of carbon emissions. So in 2016, we founded something called the Partnership for Carbon Accounting Financials, which is becoming the sort of global best practice standard. It would appear that a lot of large banks and some of the biggest carbon emitters are now using that as their methodology to understand their footprint. And we similarly need a common methodology on biodiversity. So the Partnership for Biodiversity Accounting Financials is looking at how can you do the same? How can you translate the sort of the loan and investment portfolio you have? How can you translate that into its impacts on biodiversity and then monitor that over time? But we have to have that level playing field where everyone's using a common methodology, or we'll all just be making hollow claims and setting targets that aren't something we can all track and measure progress against.
And so you call it sort of at the moment building common ground. So at the beginning, doing that collaboration work. Where are you now, and what's the sort of time horizon for this?
So 26 financial institutions with $3 trillion under management were the founders of BBAF, and it will follow the same route as PCAF has done on the carbon side, which is we'll be looking to grow that and get lots of other institutions looking and critiquing that methodology as it develops. But I hope what will then happen is what's happened with the carbon agenda, which is there are now country-specific chapters who are then looking to deepen that methodology and looking at the data that's available and so on within each country to make that really applicable to that specific market. So I hope you'll see it follow that trajectory, and perhaps it will move quicker than PCAF did on the carbon side, because there is a sort of, a trail has been blazed.
Yeah, and I was thinking that, because if you look from sort of Stern, I don't know if that's a comparator to Dasgupta, but all the way through to where we are now with climate, that's been a very long time, and we need to move a lot faster than that. So that sort of force multiplier of recognition of the problem and then obviously patterns of operating to be able to change behavior, you think that we can get a benefit perhaps from observing the climate change process?
I absolutely do. I think that's been a pathfinder for how these things can happen and can gather pace very quickly. I mean, equally though, on the carbon side, you've got regulation supporting that. So a lot of large institutions have been forced to look at what methodologies they'll use, because they are going to have to disclose their carbon risks and their carbon footprint and demonstrate what they're doing to mitigate that. That doesn't exist yet on the biodiversity side, and this is part of a wider challenge, because I think everybody's thinking net zero and thinking if we get to net zero by 2050 we solve the problem, and we have to be thinking, how do we go beyond net zero, because net zero is just getting us back to kind of 1990 levels. It's not actually getting us back to a sort of more stable state in terms of global carbon emissions. But we need to be thinking more broadly beyond just carbon, and biodiversity is the other side of that coin. A lot of the solutions to solve climate change lie in the restoration of the natural environment. So some regulation will need to shift to create the same momentum that we've currently got on the carbon emission side.
Absolutely. And of course, one of the constants that we talk about on Finextra when we're talking about sort of climate finance is greenwashing, and then obviously seeking verifiable data that avoids greenwashing and maintains confidence. So when you go through the PBAF approach, you talk about the recipe methodology, and that obviously takes inputs and data, and then obviously we'll do some aggregation of that data to evidence both the starting position, and obviously I guess check it over time. How do you see that sort of approach being adopted by the investment community over time, and what does the technical world, if you've got any ideas, need to do in terms of data input to help with that veracity of checking the data?
Yeah, I mean, to answer that question, you kind of also have to take it to a project level as well, to understand that if you are financing a particular type of agriculture, or if you're involved in infrastructure building or whatever, we need to establish, well, what are the benchmarks and assumptions around projects of those types and their impact on biodiversity, and what requirements will be put around those. But that's going to create a level of sophistication that most people haven't yet got a picture of in their minds. I've talked for years about the fact we're coming into the age of the ecologist, because people do know that people have PhDs in which species of tree absorb which sort of pollutants from the atmosphere, and which gases at what rate, and all those sorts of things. Similarly, water courses, we know certain plants remove certain nutrients and things, and so on. So we're going to be coming into an era of the age of the ecologist where we're going to hugely value that, and we're all going to need sort of common data sets and common platforms that allow us to evaluate the sort of investments that we'll be making. And particularly when it comes to projects that, as you say, there's a danger of greenwash, projects that claim to have a restorative benefit on the natural environment. Well, do they really? Is that supported by sound science? Those are the kind of challenges we'll have.
Indeed. And now you've got some projects up and running on you've blogged recently about 4 projects that you're working, I think some of them with DEFRA. Can you tell us a bit more about that, because I think people are often talking about the lack of investable assets in this space, let alone the challenges we've just been discussing. So tell us more about that, if you will.
Yeah, so I mean, in respect to biodiversity, so we're looking across our entire portfolio, which is why we're focused on this common methodology, PBAF, to try and ingrain that thinking and measure the impact of that portfolio of time. But we think we have a responsibility to go beyond that, and all financial institutions should be thinking, how are they using their customers' money in the long-term interests of their customers? So we've proactively sought to try and think, how do you create this link of economic and then financial outcomes to restoration of the natural environment? And we've been looking at it across Europe. We have actually made our first small investment in a peatland restoration project in Finland, and we're about to announce another project in Germany that actually won't entirely take financial return. It will also take some carbon credits as part of the return to the bank. But in the UK, we worked for a long time, and we 3 years ago we started the journey with some projects we'd identified to say, well, how can we get them investment ready? So there are 4 projects. One of them is another peatland restoration project. One is a major coastal realignment, so restoring salt plain grazing marsh, which has huge carbon sequestration benefits, but also lots of biodiversity gains. Another is a natural flood management project, which is the most advanced. And just to describe what that looks like, that's us, if you like, we're creating a new asset class. We're creating a special purpose vehicle that will be run and managed by a dedicated sort of conservation organisation, and it will oversee major re-engineering of a landscape, which will change the use of some farmers' fields to allow flooding again. It will reinstall meanders in a river that's been canalised just to get water out of the landscape and reduce the flood risk downstream. So it will be doing all those sorts of things, but there are people interested in paying for that, whether that's a water company that wants to avoid its sewage works flooding, whether that's a flood defence agency or insurer that want to reduce the risk. So we're getting revenues in all of those from all those different sources to pay into the project, which effectively gives us a model. Then over 10 years, we can say, well, you can afford to put this amount of investment in, and that will be repaid back through those regular payments. And this suddenly becomes a viable thing to invest in nature in order to deliver all of those economic or risk management benefits that can deliver a financial return.
That's absolutely amazing. And I think if people want to learn more about this, some of your team are going to be joining in the sustainablefinance.live workshop in May, where we're going to have discussions about this and how you actually create bankable projects, as you've just described. So Bevis, for now, thank you so much for sharing a wonderful discourse on this topic, and we look forward to working with your team and speaking to you again, hopefully face to face next time, not yet again with a lockdown bit of technology in the way.
Yeah, thanks, Richard. Take care.
Thanks very much. Bye bye.